What's going on, guys? It's Michael from Divine Traders, and today we'll be looking at a couple trades I've taken on NASDAQ as I'm using this for my own personal journal, but I've been asked to kind of go through it and help people out and show them my strategy. I basically use ICT Concepts, and I'm going through the 2024 mentorship as we speak, and so I'm practicing just writing new day opening gaps. I've been recently learning in the lecture too. I'm still going through it all slowly and precisely. I initially went and I recommend the 2022 mentorship thoroughly, but it's just a surface level. And if you really want to get down to the nitty gritty and understand price action, I think it's crucial to go through the 2024 model. He's basically teaching his son steps to become profitable. And I think it's very, very eye-opening. I really started to understand the direction of price and how price delivers at certain times, certain macro times, and it's helped with my trading career greatly. So let's go ahead and go through yesterday's market recap and the trade I took, or the couple trades I took, and then we'll go through today's because I got asked to make a video on my strategy, and instead of just giving a certain criteria of what to look for, I'll actually show you what I was looking for during the trade, and they're all legit. See, you could see my buy and sell orders, and as well as my one from today. And this is kind of my trading journal. I'll go more in depth later. And then this is the one from today. Currently, I'm doing a demo account, so this is not real money. Let me reiterate, not real money, but it's good practice using real CME data and real market price. So, already initially, let's go to the daily chart and just kind of start there because I think it's crucial to kind of see where we're at in the market. So I have a few things marked out, nothing too much. I don't like to clutter up my charts. So we have a SIBI right here on the daily, which I have marked out. It's a sell side imbalance, buy side inefficiency, meaning there's a lot of sell orders and buy side orders are not being delivered through it at the moment, and they're being respected. So we have this volume imbalance right here that is currently holding these bodies above. Yeah, price above this volume imbalance after it broke through. And then we have this SIBI on the daily chart, as you can see, holding the bodies lower. I mean, it poked through, but bodies tell the story, wicks do the damage. So it just reaches for a little bit more and then comes down, as you can see. And yeah, and then I think if I got this right, I'm still studying myself. I'm about 4 months in. I'm currently a student at a university, and I'm going into senior year. And this is what I do. I'm trying to learn this as well as manage school. So as far as I know, it looks like even though we're respecting this volume imbalance at the moment, I could see bullish order flow reaching back and distributing price lower, because what markets do is typically reach for buy side or sell side, rebalance price to inefficiencies, which I think it's doing here, or equilibrium. And this would be coming down to a discount. Discount and premiums are a part of the 2022 mentorship. And I can go into more in detail of what those are. But those are the basic PD arrays. And once you have a good understanding of that, I would recommend the 2024 model for sure. And so I look to come back into this one-day volume imbalance as it has not been filled and acts as a magnet, as well as we have a large fair value gap down here that would be in the discount of this range. So it could be used, it could be filled, it could be used as a magnet for price and then go higher, or it could stop here at this imbalance. Alrighty, moving down to a 4-hour time frame. I'm going to go to the other charts because I'm not too fluent using TradingView. I recently just started and I'm transitioning from Tradeovate to TradingView. My apologies. So what we look at here is we have a large 4-hour fair value gap where price delivered lower creating without new candlesticks forming. So this makes a fair value gap. It's from this wick, the previous wick, to, let me move that just a tad. So now it's perfect. Yeah, it's from previous wick, a candle in between, next wick. If there's no wicks overlapping, then there's a fair value gap or a SIBI. A BISI, on the other hand, is when it's a positive fair value gap, and you'll learn that in the 2022 mentorship. And I think he goes over it a little bit, not too much, because it's pretty self-explanatory. It's just the wick of the previous candle to the wick of the next candle. If there's no wicks stabbing into it on each side like this one, then it creates a fair value gap. Alrighty. So I've recently, in the lecture 2, we went over new day opening gaps, and I've just been starting to mark them and kind of see how they're respected in the charts. So I marked out this 4-hour fair value gap, and I wanted to see price from this point after news. This was a big news day, so it was a driving factor to deliver price lower. Once this fair value gap formed, I wanted to see it act as a magnet to reach back into it, stab back into it. It happens here, goes down, and happens again right here. And so that being said, we could drop down even lower to the 15. He says you only really need the 15, 5, and 1 minute. And so I've been recently focusing on that, but I have the habit from the 2022 mentorship, once again, to kind of check for a daily bias and where I anticipate price to go. You never want to impose, and I'll say this again, you never want to impose your will on the market. You use what the market gives you with good trading psychology and discipline, and you'll find success. That being said, I will just briefly go through this. So I marked out new day opening gaps where you could see the bodies are respected every once in a while. And we'll go down to the 1 minute. Sorry. I think it would be easier to show you on Tradeovate now because I'm not too fluent. I don't have much marked out here. But yeah, we'll head over there for the trade from yesterday. So let me just make this bigger, and I'll kind of explain this. Alrighty, so this is on a demo account. I'll reiterate, it is on a demo account. I'm practicing. I'm a new trader. I think it's smart to take a step back from the markets with real capital and paper trade and just lock in on specific key elements like trading psychology, discipline, and all those things, and then go in with real capital. And I think you'll succeed if you hold the strict guidelines that you set for yourself. And yeah. Alrighty. So what we're looking at here. So initially coming into the market, what I've been told, give me 1 second. In my guidelines and what I've been reviewing through the lectures, I'm on the second one. I'm going to go on the third one when I get time. Like I said, I'm currently a student and I have a lot. I make it to the gym every day and I just have a lot going on. But I've marked out a few guidelines that I follow almost every day. I said between 8 a.m. and 8:30, and even starting as soon as 7, you could look for smooth liquidity pools in the market. What are smooth liquidity pools? Well, smooth liquidity pools are just smooth price action before the New York session opens. So it's just going up and down, up and down. See how it's smooth? There's no real jagged like when it opens. So this is all defended buy side being generated. And I'll reiterate that. Generated buy side is the market fluctuating to get retail traders to put their stop in, their stop losses at the highs and lows of these. And so what happens at 8:30, from 8 to 8:30, you look and mark out the liquidity pools. So I'm marking out on a higher time frame, as you can see. This is on the 1 minute chart. There's buy side liquidity at this line where this 15-minute fair value gap is. And then there's liquidity resting above all these smooth highs and lows. So that being said, I go to the second thing. You mark out higher time frame efficiencies and balances. So we'll go back here for a second and we'll go to the 15-minute chart. And what do I have marked out here? Exactly that. And I use Tradeovate at the moment because I've been using that for a while, so I'm comfortable with it. But I eventually want to transition to using TradingView because I just think it's more clear because I can make the candles bigger and stuff. But anyway, so I marked out that we're in this 4-hour fair value gap because this will act as a magnet for price and then act as resistance heading down because it is a SIBI. Sell side inefficiency. No, sell side imbalance, buy side inefficiency. Sorry. And then I also mark out a 15-minute fair value gap. Let's see if I can find it. Give me 1 second. Yeah, it's right here. Alrighty, I think this was it right here. We're gonna go ahead and go to template, SIBI. We're gonna put SIBI on that. Why? Because order flow is bearish and sellers are selling off after this Judas swing of bull run. And what do we see? We see smooth, here, let me make it bigger. We see smooth price action. There's not much fluctuation. There's not big, jagged Judas swings. We just see fluctuations, 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 all the way up until the market starts to open, or the morning session, pre-market basically. And that's when I took my first trade. So right here, you see we're working up, we're working up, we're working up. And then with these liquidity pools that are being formed right here, I anticipate for this to get swept, which I think, don't get me wrong, it's either the Asian session, I'm pretty sure it's the Asian session close, and then London sessions are generating all this liquidity. So we stab up in this and see how the wicks, this wick specifically, holds consequent encroachment of this SIBI, like perfectly to the tick, and then delivers price lower. So going back to this, what can we see? So we take out this buy side, because buy side is where retail traders put their stop losses, and we want to run that before we go the opposite direction. And so that's exactly what we do. And what do? I mark out previous cycle high and previous cycle lows. If you guys want me to go into a video on that, that is not so much, I don't know if ICT specifically talked about it a lot, but there's other creators that I use, and I kind of mesh. I think it's very important that we use our own anticipation, or not our anticipation, our own biases when forming your own way of trading. So I use a little bit of market maker models, buy models and sell models. I'll go into that more later. I use time and price, so these previous cycle highs, previous cycle lows, and then I use big PD arrays. And using all these, I form I wouldn't say bulletproof, but a likelihood of where I want to see price being delivered. That being said, we come up here, we poke into this 15-minute fair value gap perfectly to consequent encroachment. Not even. And then, let me zoom in. And then we distribute, and we poke up a little bit more, but we're not making higher highs. So what do I see? A breakdown with displacement. There's a fair value gap that forms, and then I see this inverse fair value gap being disrespected as well as previous cycle high, which is the high from 7 o'clock to 8:30. I can go into that more in detail later, but it's the high of this candle, this whole candle, and I drag that across my screen. And as you see, we go up, we go down, and as soon as I see a market structure shift right here, which is written on my guidelines, I'll explain that later. So I look for a change in state of delivery, this is bearish order flow, and then an inverse fair value gap, which is talked about in the 2024 mentorship. It's basically a BISI that is used to propulse. Once it's broken through, it's used to propulse or act as resistance or support to send price lower. So using all these things in conjunction, we see price come up to a higher time frame PD array. We get a run of sell stops, and then we see a change of state of delivery. We're using an inverse fair value gap plus a 1 minute fair value gap right here that forms, and then I enter. I get a bad fill. I wanted to enter up here, but it started to run without me, and it poked up to here, right at halfway, right at consequent encroachment of the fair value gap. So I know it's a high likelihood that it'll one send price down, especially after running this short-term liquidity. So it starts delivering, and see how it comes back up, but respects the previous cycle high as support. I don't use support and resistance, but I'll use those terms to acknowledge that price is being delivered to the opposite direction. So it's supported. It reaches right to the tick at consequent encroachment and then goes down. And what am I looking for? I am targeting the sell stop, or this liquidity at the bottom of the smooth order flow. Pardon me. And then I see it come up, and me being a new trader and not trusting my process fully, and I'm open to that, I take out my position right here. But look how it is supported perfectly. And that's why time and price are hand in hand, and this is algorithmically generated. I'll say that till the day I die. There is no better explanation on why these things occur. So, that being said, what do we see? We see it tap up here and then shoot down. And then I mark out previous cycle low, because in the cycles, you want to mark out both, because eventually they'll act as support and resistance. So it touches it to a tick, order flow goes down, and what do? We form an SMT. I don't know. I'm pretty positive that's talked about. I'm still getting used to it. That's talked about in every mentorship. But SMTs are used and are a super good PD array to depict where the markets might go. And what is that? So NASDAQ and ES are correlated. And what I saw on ES is this low taking out buy side over here. I can't go to, let me see. Yeah. So it takes out this buy side. Sorry. Shift. This sell side, but it does not reach down here. But let's see. But see over here. Now look at this. And people are going to say this doesn't happen every single day in the market. This is an SMT, and a beautiful SMT. So all sell side initially has been took on ES, and they're correlated. So I didn't want to see it after this displacement. I knew it wasn't going to come back down here. Why? Because there's an SMT. It's already been taken on ES, and typically when there's an SMT and you're looking to go bearish, you want to take the one that's still forming higher highs, and technically this is forming higher highs on a higher time frame. Okay, going back to the markup real quick. Sorry. I'm all over the place. So the big trade for yesterday came right after this SMT. I saw this SMT and I said previous cycle low, which is the green fair value like box you see. I said previous cycle low initially gets respected, but as it gets broken through at the right time, it is used to send price higher. And what do I mean by that? So as you see, I enter off this fair value gap because we have a change in state of delivery, because from this up close candle, this white candle right here, to the bottom of this candle would be considered one Judas swing. And as soon as I see this wick get displaced with a change of state of delivery or market structure shift with strong price order, not just smooth price order, with jagged, aggressive price order, forming a BISI or a fair value gap, which is this opening from this candle to this candle's wick. See how there's no wick that is in the middle of these two and blocking it up? So through this fair value gap, I enter as soon as we re-enter this fair value gap, and we have a bullish order block, which is in bearish order flow. It's a block that is placed to regain bullish order flow before it sends price lower. And it is to a T. It is placed right here, and that is where I enter. Off the order block, the fair value gap. And even if you weren't entering there, there's an inverse fair value gap down here. And let's see if I can go and mark it real quick for y'all. Yeah, sorry, I'm not too fluent in trading view yet, but I will be soon. It's all a matter of time. Now, where are we? Yeah, right here, perfect. So once we sweep this sell side liquidity, you definitely want to look for sell side liquidity being swept in a strong displacement to the other side. Let me reiterate that, a strong displacement. You don't want just like baby candle moves. You want a clear as day bearish order or bullish order flow after a bearish movement. And what do we see here? Well, let me go down to rectangle and make some fair value gaps. So what we see on the 1 minute is a nice fair value gap right here. Plus, oh, this is, oops. That is not even the right chart. My fault, y'all. My apologies. Let's go. So after I saw that SMT where sell side was taken, we're still down. Yeah, sell side gets taken right here. Let's delete this for the sake of the video. And look what we have. We have a beautiful, strong displacement up after a market structure shift right here. I'll just annotate it for the sake of the video. Market structure shift. Why? Because it displaces with aggression, forming these fair value gaps after a run of sell side, and this Judas swing gets overtaken. So it comes back and it starts, I think ICT mentions it as a shark bite. It's jagged lines poking into this fair value gap, respecting it. In the market, you want to see what's respected and what's disrespected. So what do we see here? We see respect to bullish order flow. We see an order block right here getting respected as well. And these are all key signs that price will deliver higher after taking out sell side, because it wants to reach, it wants to go to more PD arrays, higher time frame PD arrays was the goal, and that's what I anticipated. So let's go back to the markup real quick. Using the previous cycle low, which is from 7 to 8:30, my apologies. The previous cycle low is the lowest candle in that cycle. So I mark that out. And what does price do? It takes a little while, and then I say when it gets broken, it'll be used to send price higher. And what does it do? Like, this is why price action in ICT is all you need to be successful. So we displace to it with aggression after running sell side and equal buy side, or low resistance buy side liquidity. Sorry, I just got a text. Price comes back down. I see another fair value gap formed, and my overall bias is bullish still, because I want to see it reach back up into this large 4-hour fair value gap. Why? Because PD arrays are magnets for price on a higher time frame especially. So it stabs back into this previous cycle low. It goes to the tick. I'll reiterate that. To the tick. And displaces higher. That is flawless price action. And I think I took 4 contracts here, 4 micro NASDAQ contracts. And so I scaled out 2 positions at the high of this. Because why? because that is where stop loss is for retail traders who think this is a trend going downwards. And so it takes out that, it comes back, and yeah, you might be able to re-enter here, but it stabs through this fair value gap. So to be better safe than sorry, I take half my position out here, move my stop loss up to take profit under this previous cycle low and fair value gap, because I don't expect price to come back down here, and if it did, it could reverse, which I don't think it should, because it wouldn't make sense. It wouldn't go along with my bias, and that's the main thing. And so what I do from here is I just watch my other two contracts go and slowly take out the 4 hour, or stab into the 4 hour fair value gap. And that's where this line is, and higher buy side. This is a higher time frame buy side, which is a strong magnet for price because it wants to attack buy side. That's what the algorithm's designed for. It starts out with accumulation, then it comes down and manipulates. It gets all the people going down. Retail traders think that bearish order flow is in. Now price will just keep going down. What's it do? It reverses and starts taking out all these candle highs, just gaining liquidity before it delivers higher. And that's all part of the algorithm. And if you use all these concepts, I even enter here off this fair value gap. There's another fair value gap you could enter it off of. But why is this a lower probability and not as likely to reach? Because we already took out initial buy side that's been generated, low resistance buy side, as well as right here you could think it's a market structure shift, but it isn't. This is what we call a turtle soup, and you can learn about that in another one of my videos. I'll go over it if you guys want. There's a bunch of concepts that you guys have to learn, but see, there would be stop losses down here, liquidity. It's going to grab that and then go higher. Why? Because it needs liquidity from traders to send price higher as well. Or it attacks buy side or sell side before it goes back. And what do? What do I anticipate price to do? After we take this buy side right here, I expect price to stab through, come back into 50% of this Fibonacci range. If you took a Fibonacci and went up into here, I expect price to retract to a Judas swing discount and then deliver price higher, because price moves in Judas swings. It goes up, comes down, goes up, comes down, goes up, comes down, goes up, comes down. It stabs into this optimal trade entry if you're looking at a small time frame, which is 62.5 to 72.5% into this fair value gap and delivers higher. So I re-enter while taking out these sell stops. That being said, this was trade number one, or trade number two, and it was a beautiful trade. Everything was to a T. Price was respected off these previous cycle highs and lows, and using price and price action, not imposing my will, but giving what the market shows me. I was open to whatever it gave me, and I made 1.2K, I think, off this trading day, which was beautiful. And there was no real stress. Once you stop anticipating or imposing your will on where you want it to go and let it show you where it wants to go and what it's attacking and what it's disrespecting, it'll be so eye-opening and so clear. It'll make so much sense. I promise. Alrighty. So that's trading day from yesterday. And now today. Let's see. Another beautiful trade. I don't have it annotated with the cycle high and cycle lows, but we can go over the guidelines and kind of break this down. This is a very good informational video. I would say I'm using it personally for journaling for myself so I can explain my trades, as well as teach some people. Because like I said, somebody asked me, and if I could help one person out, some person might be able to use it. And that's the only thing. If it's just one person I can help out, I'm willing to do it. And if more people can use this information and better their trades, and yeah, take what I've taught from this short video, which is not much, it's just explaining my trades and how I trade, and use it to make money or to be a successful trader and be disciplined, that's all I'm here for. Nothing else, I promise. No money. Zero money from y'all. Alrighty, let's see. So, let's go over the guidelines again. Between 8 a.m., 8:30, look for smooth liquidity pools within the market. What's going on here? So we got smooth liquidity runs. And why do I take a trade here, you say? Because we got fair value gaps and it's smooth. We got a strong displacement down. And this is pre-market. It's very low liquidity and it's good practice for me. But I would not, this is not where I want to target and not where I want to trade. I want to trade here. And what happens here? So after this rigid order flow is being generated with buy side and sell side, look what we do. We poke down into it. We take out all of this generated liquidity down here. We deliver price higher. Why don't I take a trade? Because today at 10 a.m. we had news and 8:30 we had news. And what you don't want to do is get caught up in a trade at 10 a.m. when news is happening. You want to wait till after and price will have a definite direction for a certain period of the day. You could see towards the end it was doing a lot of up and down, and that's where you get anxious, is when you try to enter a trade because you're scared of missing out and you get chopped up in what I call waves. It's just up and down with no direction. Anyway, the large moves from 9:30 were very bullish, super bullish. But look at it. It's very choppy, and I don't want to enter there. I'm waiting till 10 o'clock or till the markets give me what I want. And what did I want to see? And what did I come in the market to see? I came up to first see this 4-hour fair value gap up here that's highlighted act as a magnet for price. And so it goes up there while taking out previous sessions buy side. I have that marked wrong. I apologize. This is buy side liquidity. It taps the 4-hour fair value gap, and what do we see? Huge, and I mean huge selling pressure. These large candles, 4 o'clock, and this is after news. So after news, this is a perfect silver bullet model from 2022, mentorship from ICT. It's a perfect model. So after 10 o'clock, from the 10 to 11 o'clock window, you're looking for a run of some sort of liquidity on a higher time frame, and we poke into this 4-hour fair value gap, and we just take a bite out of it. We don't go all the way up. We respect it, and what do? We're looking for respect and disrespect of certain PD arrays. So here we are. We form this inversion fair value gap, which is a BISI, and that is a fair value gap that gets disrespected by bearish order flow on a bullish uptrend, you could say, per se. And we go down and we come up into this fair value gap, and I don't need to be up here. I'm fine with being right here. I'm not scared for price to go up here. Why? Because we already took out buy side and we already tapped this 4-hour fair value gap. We displace down. I buy in here. We come up to this inversion fair value gap, tap it, but respect it. In the wick, the bodies tell the story, wicks do the damage. So the wick goes up here, but the bodies are respecting consequent encroachment of this fair value gap. That's a sign of respect for bearish order flow on the downwards. So all that being said, I even enter 2 more contracts up here. Why? Because we're respecting PD arrays to send price lower. After we've already taken out what I wanted to see, which is a run of buy side into a 4-hour fair value gap, a higher time frame PD array. And then I draw out this Fibonacci just to kind of give me an estimate. I just kind of want to see where we're at of this Judas swing, this large Judas swing. And if you flip it around, this entry that I entered at on the top is an optimal trade entry. This is about 62.5 to 72.5%. And you can enter right on this IFG, IFVG, inverse fair value gap. And it'll deliver price down. And what did it do? I was targeting this sell side right here. Because I just need a piece of the pie. I don't need the whole move. And I wasn't building emotion. I was just letting it run. And look at that. It come down here. And then after it sweeps it retracts. It pokes into it again. And I see on a higher time frame, I think a 15-minute, we have a fair value gap. And so I choose to get out. Because I didn't know if we wanted more. We wanted to go stab more. And I was fine with the profits I made. I think I made $983 today. And I was perfectly okay with that. There was no reason to stay in the trade longer. I saw what I wanted to see, and I got what I wanted to. I got my piece of the pie. And I executed, and it worked out. And now look, if I were to stay in the trade, I would just be anxious. I would be like, please go down, touch this fair value gap, and shoot down. And what does it do? It goes down, yeah. It reaches in a little bit more, then comes back up. It never goes down to the sell side. Why? Because it gets swept already at that very moment. And then eventually it goes down, but I only want to trade the morning session. Because I don't want to get stuck in this chop, because that's where emotion rise. And when your emotions are not in line with your guidelines and how you want to trade, you can overtrade, you could rage trade, you could revenge trade. There's so many different bad outcomes from doing things like that. Alrighty. So, that's basically the market recaps and trade recaps. I think I banked around 2.2K. And yeah, it was just beautiful trades, very clean setups. What I learned was smooth versus rigid. In new day opening gaps, I'm still running. I'm still working on. But I have these guidelines set. You guys could copy this, save it, whatever you guys want to do. I currently have a Discord up. It's brand new. We are going to... Let's go over to it. My goal is to... Yeah, I wrote... Welcome. The goal of this Discord community primarily is to create a small knitted group of self-driven individuals who are striving to become successful traders using psychology, discipline, and strictly price action. And that's what I do. I use market maker buy models, market maker sell models. I use time, and I just use PD arrays. And what does it do? It is doing everything I want it to do without me forcing and imposing my will on the markets. That's beautiful. And I will continue to go through the 2024 mentorship, where ICT is coaching his son on how to be profitable. And we're all going to make it. So I'd like to see you guys there. And I appreciate you guys for watching this extensive video. I hope it helped. And to the one person who asked, here's the video that I promise. And if it helps anyone else, feel free to join the Discord. And I'd love to talk, communicate, and we can grow together. So I appreciate it. You guys all have a good one. And I'll see you eventually.